Welcome back to the channel, everyone. Today I want to talk about Rich Greenfield, the clueless analyst, and his recent interview on CNBC. And I've also got a bunch of other key updates as well. So stay tuned and let's make some money. But guys, before I dive into the video, I just want to give a massive shout out to the 3,700 of you that have currently dinged that notification bell, because you guys are always the first to watch a new video as soon as it's released. So guys, be sure to drop a like down below, subscribe to the channel, and ding that notification bell if you haven't already, so that you don't miss another video just like this one. And now I want to dive straight in with the key information. So, the recent price action in AMC Entertainment is showing that retail investors are selling the stock, like shed partner analyst Rich Greenfield said on Monday on CNBC's Squawk Box. Now I'm going to debunk everything Rich Greenfield says in this interview and show why he is so wrong. But first, let's go through what he actually said. The reality is, the short interest has really dried up. The crazy thing now is that you've got a lot of retail shareholders trying to convince other retail shareholders to buy the stock while they're clearly dumping the shares, Greenfield said. The reason that retail investors are selling the stock makes a lot of sense, he added. The box office is very underwhelming because there just aren't enough people willing to go to the theatres, Greenfield told CNBC. Especially for family films, it seems like financial that word. The main short thesis on AMC is that movie studios don't care about the movie theatres. Instead, they're focused on making money on content, he said. The core movie business isn't the reason potential investors want to invest in any large media company. Rather, it's all about the streaming, Greenfield said. Investors are going to reward companies for streaming, not box office dollars, he added. AMC is set to report its second quarter financial results after the market closed today, which is yesterday on Monday, which we obviously know the results of now. I was actually just going to go through all of those points one by one, but actually Peter Hann has made a brilliant summary. Daily fidelity data over the last month has indicated that odd lot transactions, as in us retail investors, of shares have buys outnumbering sells, usually by a 2-to-1 margin. Therefore, the retail investors, us, are buying more stock of AMC and not selling it. Meanwhile, dark pool usage over the period where AMC share price has fallen has exceeded 50% and went as high as 73% on one occasion. Coincidence? Basically, what Peter Hann is saying there is that it's not us retail investors that are selling the stock, because fidelity shows that we're doubling the amount of sell orders in buy orders, and that actually it's the dark pool manipulation that's crushing the AMC price. Moreover, the latest 13F filing data continues to indicate buying interest from large institutions. The August 6, 2021 13F report from Fintel shows the Swiss National Bank increasing its AMC holdings by 325%. I've also got a very interesting update coming in a little bit about AllianceBernstein buying shares in AMC that I'll explain in more detail later. Obviously, we've got the AMC second quarter earnings that, again, I'm going to go through separately, but basically, AMC absolutely smashed it. In addition, during the call today, AMC noted it reached an exclusive deal with Warner Brothers, also noted that it has the technology and process to accept Bitcoin as payment by the end of the year. This really goes back to this paragraph here, where Rich Greenfield said that investors are going to reward companies for streaming, not box office dollars. And yet, Warner Brothers just signed an exclusive deal with AMC for AMC to show films at the box office for either 45 or 60 days before it's released on streaming platforms. Therefore, clearly other giant companies out there like Disney and Warner Brothers are still interested in showing films at the box office before they stream them. Therefore, you can clearly see that Rich Greenfield is absolutely clueless and has no idea the true potential of the AMC stock. He has his price target set all the way down at 1 cent per share for AMC, basically expecting the company to go bankrupt. But really, he's just clueless and isn't even aware of the fundamentals of AMC. Even though this is a short squeeze play and not a fundamental play, the fundamentals for AMC have just been consistently improving since January, and therefore even the short thesis doesn't even make sense anymore. Something that's absolutely hilarious as well is that Rich Greenfield doesn't actually have a license to be an analyst any longer, but has still been working in the media without one. Oops. Imagine if someone was to tell the SEC that little Rich Greenfield has been an illegal analyst for CNBC. That's hilarious because Rich Greenfield has been giving price targets and financial advice to people to sell the AMC stock, and he's not even a licensed analyst anymore. As you can see, AMC absolutely obliterated their earnings. $444 million of revenue versus a $382 million expected amount. That's about a 20% beat, which is huge. These earnings also boosted our quarter-ending liquidity to more than $2 billion, including cash and undrawn revolving lines of credit, which is about double the previous highest ever such mark in AMC's 101-year history. Basically, AMC has more cash on hand than it's ever had in its entire 100-year history by more than double, basically meaning that they can use this cash to pay down their debt, go on a rampage of acquisitions, and just consistently improve the fundamentals of AMC and become a profitable company. AMC also started to see rising movie-going demand, and they safely welcomed more than 22 million guests back to the theatres across the globe during the course of the second quarter. New blockbuster films released during the quarter drove successive new post-pandemic era box office records as well. You can also see an absolutely insane recovery in the revenue year on year. For the second quarter of 2020, they generated $18 million of revenue, and in the second quarter of 2021, $444 million. On top of this, we've also got the AMC CEO and president, Aron, speaking with Charles Payne today on CNBC. Hopefully this will be a brilliant discussion and a brilliant interview. Hopefully Charles Payne asks Aron about synthetic shares and dark pool abuse. This would be a brilliant time for Aron to out the news of the sheer amount of synthetic shares live on air with Charles Payne, but unfortunately I don't think Aron can do that because it's against the SEC rules, because the SEC are currently investigating AMC and the short sellers. I personally agree with Jim on this one here. It's time to put the firms that are lending shares under the microscope. If they don't own a real share to lend, then they may be guilty of selling counterfeit shares. That's a Class C felony, a violation of SEC laws, and it's securities fraud, with up to 20 years in prison and a $5 million in fines. That absolutely shows the risks that these firms are taking by selling short synthetic shares that don't actually exist when they can't locate real shares to short. We hold all the shares and we aren't lending them out. Therefore, they're having to actually create these shares to short them, which is against SEC laws. I also wanted to update you on this seriously interesting purchase of AMC shares. AllianceBernstein purchased 497,000 shares in AMC. But do you guys know who has a huge ownership of this company? It's Nancy Pelosi's husband. He jumped into AMC and NMAT on the 8th of March. So the 13F showed that this fund picked up 445,000 shares at $6 a share back in May, and they then added to that position with an additional 9% more as of the end of July, and are still holding their position and haven't sold the AMC stock. So they added to it recently after buying heavily in May. A very bullish sign, with all the pension funds buying into it as well. Nancy Pelosi is a speaker at the US House of Representatives. Therefore, she's aware of all of these high-level political decisions that are going on, and has obviously told her husband to buy shares in AMC, and has also told him that the squeeze hasn't yet finished. That's why he's holding nearly 500,000 shares in AMC and hadn't sold any of them as at the end of July. Therefore, clearly, the squeeze isn't yet over. Even though you can't apply technical analysis to AMC at the moment because of the heavy manipulation in the dark pool, it does look like the AMC stock has taken a turn and will not be revisiting the low of $28.91. The stock price is now moving up, especially in the post-market and pre-market after that brilliant earnings results release. Hopefully throughout the rest of this week, the AMC stock continues onwards towards the $40 mark and beyond, and then I think that will put AMC in an excellent position for the apes to take back over control of the AMC stock. I think if we can break through this wedge around the $42 mark, the apes will absolutely be back in control. As this meme expertly summarises, there's so many key catalysts for AMC at the moment, especially this week, and therefore I think AMC is in a great position. As always guys, be sure to leave a comment down below. Let me know what you think about Rich Greenfield. Do you think he's absolutely clueless with his 1 cent AMC price target, and how he's blissfully unaware of even the most simple of AMC fundamentals? Also guys, I wanted to announce that instead of partnering with Webull, I've now partnered with Moomoo. Moomoo are an excellent beginner investing platform. They've got free level 2 data, they've got great charting, they've got news, company fundamentals and figures, they've got absolutely everything. So if you do want to pick up some shares, but you haven't even yet signed up for a trading platform, be sure to check out the link in the description below to sign up to Moomoo and to get up to 4 free shares worth up to $3,350. Or if you're based in the UK, be sure to sign up to Free Trade, again, linked in the description, to get some free shares worth up to £200. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!